When starting contracting, most contractors will form a limited company. Contracts would be on a business-to-business basis, and all funds would flow into the new limited company business bank account. The limited company acts as a vehicle to receive money and then distribute it to you in three main ways: salary, expenses, dividends. The most efficient way to draw the funds is as expenses, dividends, and then salary. However, life often doesn't work in the same way, and you tend to draw salary, then expenses, and dividends in that sequence. How does the tax system work for tax year 2019 to 2020? With national insurance contributions, for the first £8,400, you pay no employer or employee NIC. From £8,400 to £45,000, the employee pays 12%. Above £45,000, the employee pays 2%. The company will pay employer NIC at a rate of 13.8% on all income above £8,400. For the first £12,500 per annum, you pay 0%. Then, from £12,500 to £50,000, you pay 20%. From £50,000 to £150,000, you pay 40%. Over that amount, you pay 45%. Corporate tax is charged on all profits in the business at a rate of 19% and falling over the next few years. By claiming expenses, you save 14.8% of NIC and tax at 40%. By taking dividend income, you save 14.8% in NIC. It is always wise to declare some income because HMRC can see the amount of salary declared under something called real-time information filing. Often, a small salary of around £15,000 gross, which is £1,250 per month, and £1,150 net of tax, leaving £100 in PAYE per month, is sufficient to satisfy HMRC. HMRC have visibility of the PAYE because the personal tax year runs from the 6th of April to the 5th of April each year, whereas the corporate tax year runs from 12 months after the date of formation of the business. Wholly allowable expenses are a very important way to draw funds from the business, and there are typically three types of expenses to consider. Reimbursed expenses are costs you would have claimed as a normal employee for expenses incurred during the course of business. Company expenses, such as professional insurance or accountancy fees, will be tax deductible. Company benefits, such as pension, relevant life policy, and other costs, can be claimed. So what happens monthly? You draw a combination of salary and reimbursed expenses to achieve a monthly amount of income that you can live on. This is repeated each month, and at the end of each quarter, we can assess the profitability of the business, and at that stage, you can declare and draw a dividend payment. This is the balance of the funds left in the business after corporate tax, and you can decide to either declare and draw all of this, or leave some or all of the funds in the business as retained profit. Tax on dividends is as follows. The first £2,000 is tax-free. The remaining balance of your lower rate tax threshold, which is £50,000 less any salary taken and the £2,000, would be taxed at 7.5% personal tax. Up to £150,000 is then taxed at 32.5%. Over £150,000 is taxed at 38.1%. VAT is charged to your end client or agency at a rate of 20% on top of the agreed contract rate. VAT is then repaid to HMRC on a quarterly basis using the amount you have received, less the amount you have spent on any business expenses that have VAT charged on them.